This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello, it is Tuesday. This is The Global View. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Let's first start with what we saw on global markets overnight. Investor sentiment turning sour as President Trump unveiled 25% tariffs on goods from Japan and South Korea, with more US trading partners expected to be hit with new levies. Ahead of the news, European shares ended higher, but Wall Street's major indices closed sharply lower in response to the latest tariff regime. Stocks wobbling further when President Trump announced hefty tariffs on more Asian countries. The S&P 500's biggest drag, though, came from EV maker Tesla, its shares reversing dramatically after Chief Executive Elon Musk announced a new political party called America Party and reigniting a feud with Donald Trump. Elsewhere among the Mag 7 stocks, Amazon managing to finish positively, but Apple down more than 1.5%. And US-listed shares of Japanese car manufacturers fell in reaction to the newly announced tariffs on Japanese exports. Elsewhere, shares of WNS Holdings rallied more than 14% after the French IT services firm Capgemini agreed to buy the outsourcing firm for $3.3 billion in cash. And US-listed shares of BHP and Rio fell as copper prices tumbled. And in the UK, the FTSE 100 was dragged lower by Shell, with the energy major expecting quarterly earnings to be hit by weaker trading. Well, US President Donald Trump has warned trading partners, including Japan and South Korea, that sharply higher US tariffs will begin on August the 1st, saying if for any reason you decide to raise your tariffs, then whatever the number you choose to raise them by will be added on to the 25% that we charge. That's what the president had to say in letters sent to the Asian exporting giants. Additionally, President Trump said 25% tariffs would be imposed on Tunisia, Malaysia and Kazakhstan, 30% on South Africa, Bosnia and Herzegovina, 35% on Serbia and Bangladesh, 36% on Cambodia and Thailand, and 40% on Laos and Myanmar. He's also threatened an extra 10% tariff on countries aligning themselves with what he calls the anti-American policies of the BRICS group of Brazil, Russia, India, China and South Africa. Well, meanwhile, here at home, the focus will be on the Reserve Bank decision today, with expectations the board will deliver a 25 basis point rate cut, taking the cash rate down to 3.6%. Longer dated US Treasury yields rose following the US tariff announcement. The 10-year was up around 6 basis points to 4.39%, the 2-year at around 3.9%. And the US dollar rose sharply against other major currencies, particularly against the yen, rising more than 1%. The Aussie taking a tumble, had at one stage fallen back below the 65 US cent mark. It is at 65 at the moment. And Bitcoin lower, currently at 108,000 US dollars. On the commodities front, oil prices surged on signs of strong demand, offsetting the impact of higher than expected OPEC plus output hike for August and fresh concerns about the potential impact of US tariffs. Brent crude futures up around 2% at $69 a barrel. Copper was off 2.5%, iron ore falling 0.5% to $95 a tonne, and gold paired earlier losses following the tariff announcement, having initially slid around 1% on a stronger US dollar. Spot gold trading around $3,333 an ounce. So let's get more on US markets and reaction, of course, to the latest tariff announcement. Steve Sosnick is the chief strategist at Interactive Brokers. He joins again now. Steve, welcome back. Good to see you. Let's start with that news then. The latest tariff announcements from Donald Trump. How would you describe the market reaction? We've spoken in the past about the complacency of markets in the face of these risks. What did you see?
Good morning, Andrew. So I'm not going to call it complacency because we did actually react, but all we did was gave back Friday's gains. It was a little bit lower at its worst, but then we had the usual end of the day ramp that took it back, back basically in line with I guess it was Thursday at this point, that half day. The market had more or less been ignoring the idea of tariffs coming into play. We knew that the July 9th deadline was this week, and that we, far from having 90 deals in 90 days as promised, we had two, relatively minor ones with the UK and Vietnam. And so there would be a lot of work to do. So we learned two things simultaneously. Number one, they got pushed back again to August 1st, which, in itself, the market was kind of expecting some sort of pushback. But I guess then the second part was there were I'm going to call it the letters with demands in them, was more or less, rather than a negotiating letter, more or less laying out one side of the discussion, basically our demands or our talking points. And so market didn't love it, but didn't hate it either. I think as long as there's plausible deniability, or there's still some ability for the market to think that the tariffs might get pushed back or otherwise negotiated away, then the market's not great with it, but not freaking out yet.
Is there confusion, though, just about the timing of these tariffs and when they're likely to kick in? Because he's put an August 1st date on it. What's likely to happen then, that deadline date of July 9th?
Well, on July 9th, it seems like nothing really is going to happen. It sounds like they basically laid out a negotiating position for August 1st. But even there's enough of a little bit of wiggle room in there, right? Like, I think if the countries can plausibly be said to be negotiating in good faith, if they can sign a deal. So I think that's why the market is not, completely getting bent out of shape by this, because there's enough wiggle room there. And I think what the lesson the market learned in April was, don't freak out too much about these tariffs. The term that's thrown around is the taco trade. I don't like to use that because it's, that's politically charged. But I think it's more about, the president likes to negotiate, and I think he wants to keep negotiating. And I think he laid out his set of demands, and to the extent that something can be negotiated, that he can call a win. It doesn't necessarily have to be win-win. Then I think we can see this play out over a longer period of time, which of course does keep the uncertainty factor in front of us. But it also allows the markets to just sort of continue to do what they do without really succumbing to the type of fear that they encountered in April.
Now, Steve, of course, since we last spoke to you, Donald Trump has managed to get his big, beautiful bill across the line, signing it into law. Once again, what markets pretty much taking it in their stride?
Yeah, well, I mean, this one's been brewing for a while. I did think there might be a little bit of a sell the news type of reaction. There's good and bad. Basically, from a corporate point of view, there's some things about accelerated depreciation that are helpful. Certainly, one can look at the tax plans and say, well, if you're giving more tax breaks to people who have more money to spend and more money to invest, that could be good for the market as well. Some of the worst, effects in terms of the debt and the deficit won't be seen for a little bit, so we sort of kick the can down the road. But so that's why I think that, this was to be expected. There was a lot of back and forth, but ultimately the political hand-wringing never really amounted to much. And the deal was able to pass through the Senate, then through the House again, and then the president signed it. This is what we've been expecting. And so here it is, and we'll see how it all plays out.
Indeed. And Steve, Tesla investors, none too pleased, of course, that Elon Musk is weighing back into politics.
Yeah, I use the term today, Tesla vigilantes, because I think right now that has become a factor here. The markets basically don't mind, they want Elon Musk involved in the business. I think the market reacted super positively. Well, we know the market reacted super positively when, he went a long way to engineering a Trump victory. The market liked his role as part of the administration. And then, but the market's kind of tired of it. He politicized his brand. He was clearly distracted by politics. And I think the market was cheering the fact that he would be focusing on his businesses, of which Tesla, by the way, is only one of several. But at least he would be focused on businesses. And then sure enough, he says he wants to start another political party, which will, of course, require him taking time away and focus away from his businesses. So down we went 7%. And I think this is the market's way of trying to keep a person in check who was essentially impossible to keep in check.
Yeah, yeah. It's a watching story, isn't it? Steve, great to catch up again. Thanks for joining us from Interactive Brokers.
My pleasure, Andrew. Thank you.
All right, let's turn our attention to how we're likely to begin on this Tuesday locally, with SPI futures indicating will be a negative start, currently off just over 0.5%. The feature today, of course, will be very much on the RBA, with expectations it is going to cut rates again by another 0.25 percentage point. Stay with us. The Open is just a minute or two away.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.